Today is 4th June 2023 and this video is all about my understanding about distribution. We all know that market moves in phases. There are four phases in the market. The first is accumulation phase, then the uptrend or the public participation phase, then comes the distribution phase, and then comes the downtrend. So basically we know that there are two trends and uptrend and downtrend, and there is a sideways trend. So combining all these trends and also there is a cycle, we have these four phases: accumulation, uptrend, distribution and downtrend. So this video is all about distribution and what do I understand about the distribution. That's what I'm going to discuss in this video. Firstly, distribution. What is distribution? Distribution is basically refers to when the shares of the company are being sold on net in the market, which is opposite of the accumulation. So what do I mean by this? Distribution is basically, as the name suggests, it is distributing the shares. So those who are informed investors or those who are promoters or those who are big money, smart money in the market, what do? They accumulate at the very lower prices, at a very bottom of the market. They had started accumulating the shares, and once the stock market goes up at the top, they start booking their profits, and they don't do it in a chunk or then do it in a bulk. So they start selling their shares in small quantities. So this whole phase is called as distribution. So it generally occurs obviously at the top of the market. So exact top cannot be identified, but there is a great period or a great time zone that goes in which this distribution occurs. So there are few fundamental observations about it. So let us see what are those. Firstly, basically they inform investors, as I had mentioned already, they had bought at the bottom, and now once their portfolio is in good profit, they will look for some profit booking, and that's where they start selling their stocks, and hence the outflow is seen. That is the fundamental first observation which is made. Another thing is dividend declaration. Now dividend is nothing but a cash distribution made to the shareholders. It may also take the form of additional shares, which is known as stock dividend. So you may hear that XYZ companies are declaring the stock dividends or declaring the dividends. Basically this dividend declaration occurs at this distribution phase. This is what another important observation is. And lastly, you will see there are a lot many IPOs and QIPs coming in the market. So this also typically happens in the bull market. So when everyone is optimized and everyone is optimistic about the market, everyone is happy and euphoric about the market, that's where the IPOs and QIPs do get listed. You will never see IPO coming in the bear market. So that those are three fundamental observations. Now how do we use this fundamental observation? Whenever you see or you hear the news about everything, dividend, maybe IPO, QIP, or you will see investors are selling some stocks, you have to be alert that probably we are at the top, we are at some short term tops of the market. So that is how you can be cautious if you are investor or trader in the market. Now coming to the four market phases and the technical observation. As a technical analyst, we need to know what do we need to see on the chart. So let us see. Firstly, coming to the accumulation phase, accumulation occurs at the bottom. There is a prior downtrend, and at the bottom of the downtrend you will see accumulation happening. Early adopters or early promoters or early investors starts to buy at this point. So even their buying happens in a small quantity, and gradually and slowly they will increase their quantity, and that's how market starts to goes up. So accumulation is the first phase of the beginning of the uptrend. At this time 200 moving average will help you as a guide. 200 moving average is initially which is flat, then as there is more and more buying, as more and more public, retail and inform investors starts buying the stocks, that's when the actual higher low higher high structure gets formed, and that is where the beginning of the uptrend is marked. You will notice the price is slowly gradually will start moving about the 200 moving average. Even the slope of the 200 moving average will start bending upwards. Okay, so uptrend will last for a significant period of time when more and more people will start buying. There will be shallow retracement and people will buy on the dips, and that attitude will go on till the end of the uptrend. Now at the end there is this important phase called as distribution. This distribution can take place for many weeks to many months, even many years. If the distribution is happening on the higher time frame, you can expect this distribution to happen for many years as well. So what do we see in the distribution phase is that sellers begin to dominate. So buyers are not aggressive like they were aggressive in the uptrend, but distribution may what happens is sellers start dominating. They will come and start selling their stocks gradually. Market reaches the peak. Generally distribution is seen at the top, okay, and again you will notice that 200 moving average becomes flat. So that is the sign you will be cautious that whether we are in the distribution phase. Once this distribution is over, ultimately the downtrend starts. So on a technical you will see market is not making higher highs, instead it will start making lower highs and lower low, and then panic will set in. People will start exiting their positions. Finally price will break below this 200 moving average, and then the further downtrend will resume. So that is what the cycle of the market takes place. Let us again go and see what are my technical observations are. Firstly you will see tight higher high on the chart. So now what do I mean by tight higher high is that, let us go on to the chart and see what do I mean by tight higher high on the higher time frame. So I have this nifty chart in front of me. This is nifty monthly chart. All right, and what I have plotted is 200 EMA on this chart. So as you will see, Nifty is an amazing bullish run. Nifty is India's growth story, which is a good uptrend. So this was the 2008 correction. Then we had a good uptrend, and this is the recent crash that we had observed in the Corona. March 2020, we had a great fall. But if you notice, before this crash happened, there is a pattern in the market. This pattern is known as tight higher high. Tight higher high means when uptrend is defined by the higher highs and higher lows. So after this higher low, you will see the higher high which is formed, which is not very great. It is nearby to the previous high. Then again there is a high, but again it is not at the higher level. It is very tighter, very closer by to the previous high. Similar is the case with this. So this structure is called as tight higher highs on a monthly time frame, and eventually the corrections are getting deeper. So like in this case there was a shallow correction, but here in this tight higher high structure you will see even the correction is getting steeper. Ultimately all this structure breaks down into a bigger crash. So this is a typical distribution. Now according to me, in my observation, currently also we are into the tight higher high structure. That is what my view is. I may be wrong, but you will see there was a top made on October 2021. Then we had a correction. From this we made a top in the December 2022. So in a year 2021 to 2022, Nifty is moved nothing. I mean there is no growth in Nifty. That is typical sign of tight higher high. Again there was a shallow retracement, but currently market is struggling to move ahead. Everyone is talking about all time highs and all, but do we really see any growth in Nifty? The answer is no. So that's why I'm suspecting that whether we are in distribution, that's a question mark. Let us see, time will tell. But current observation is that also now you will see we are at the ultimate high in the Nifty monthly chart. So on the top, if we see there is a tight higher high structure which is getting formed, that is first sign that it is a sign of distribution. So one has to be cautious. Coming back to our slides. Okay, so possible bearish divergence. You all know that bearish divergence is when the price is making higher highs and your indicator is making lower highs. So on a monthly time frame, if you see in a Nifty chart, Like as I said before the crash in Corona, we had this tight higher high. At the same time, the stochastic was making bearish divergences on a monthly time frame. Similarly, if you see current picture, the price though it is moving high, but the oscillator or the indicator is probably indicating the bearish divergence. So that is another observation. This is a possible bearish divergence, that what I am saying. It is yet to get confirmed, but one definite sign of cautious. Okay, so this is another observation of the current possible distribution phase. Then you will see sluggish growth or a range bound action for long duration. That is what I'm saying ki, after the 2021 top, currently Nifty has shown very little growth and the market is somehow sideways. So for the long time, almost it is 2 years, we are doing nothing in the Nifty. Then 200 EMA is getting flatter. Let us see how do we see 200 EMA on a daily time frame. So yeah, so that's Nifty. Monthly the slope is still good, there is no problem about the 200 moving average. But on a daily chart, if you see, when there was a good uptrend, the slope was uptrending. But after this range bound action, the 200 moving average, the 200 moving average is getting flatter and flatter, though the price is still above 200 moving average. But this observation for a long duration of the time, the 200 moving average getting flatter is one of the amazing observation that one must notice. Next is leaders of the stock market start breaking down. That is another observation. Now what do I mean by leaders of the stock market? In case of Nifty, I have mentioned about the Ritik stocks. So let us see what are those Ritik stocks. The leaders means the heavyweight. So these are 7 stocks which we need to see. If they are they start to break down, then that's a sign that we are into the distribution. So let us see one by one. So this is Kotak. Yeah, Kotak is also sluggish and sideways, though it is still not yet broke down, but yes, signs of sluggishness are evident. HDFC Bank. So even HDFC Bank is showing a selling pressure from the resistance. So last month's candle is red. Again, there is a selling pressure which is evident. This longer upper weeks is not good. Reliance, which is the large cap, the largest one, again there is a lower high formation on a monthly time frame, and we are again seeing some selling pressure on the Reliance as well. There is no growth. HDFC Limited on a monthly, a lower high formation. IT Pack, TCS and Infi not so doing good, though Nifty is at the all time high, but TCS Infi are at much lower level. Same is the case with the Infi. The only chart which is good is ITC, and even in ITC there is a possible bearish divergence on a monthly time frame. Possible, I am not saying there is a bearish divergence, but possible bearish divergence. So apart from ITC, all other 6 leaders are breaking down. So even that is a point to note, to be cautious. Okay. And lastly, intermarket analysis. Now what do I mean by intermarket analysis is comparing the Nifty chart with the other indices like DJI. So this is Nifty in front of us. So Nifty is currently at the all time highs, very near to the all time high, but at the same time, if you see DJI, I mean Dow Jones, it is not doing that great. It is sideways since very long time. If you see another indices like DAX or FTSE or Europe indexes, even they are not doing good, they are rather breaking downs. So even intermarket analysis is not up to the mark. Nifty though is outperforming currently, but the question is till when Nifty can stand alone. So one must be cautious. So yeah, that was about technical observations. These are the points which I now see on the technicals front, which kept me in the question that are we in the distribution. So let us see, time will tell. Coming on to the cycle of market emotion. So whenever there is a uptrend, it generally starts with the optimism, then the more participation comes in, excitement sets in, thrill, And finally there is euphoria. Everyone is talking about market being bull, everyone is so bullish on the market. That phase is called excess phase in the distribution. So you will see one of the stocks suddenly moving up to 10%, one of the stocks is making all time highs, but rest of the market is not doing good. That is when you have to suspect the ultimate top of the market. So as a technical analysis, one must be aware of this thing. When there is a euphoria in the market, that is somewhere the top is in the formation. Then once the selling pressure sets in, then anxiety firstly, then there is a denial. No one is ready to believe that market is going to crash. There is always a denier. But once market cracks down, there is a fear, panic, and finally it leads to desperation, panic selling happens, and the depression. So that's how the downtrend is governed. That those are the emotion those govern the downtrend. Ultimately at the bottom again there is a accumulation which starts with the depression, then some hope setting, some relief rally comes, and finally it builds the optimism. And that's how this cycle of the market continues. Currently I feel that we are into this thrill to euphoria phase. Let us see what happens next. Now, after all these observations, how do we use this knowledge? So, firstly, don't panic. I'm not making this video to create any panic in you that we are going to crash or something like that. Time will tell. Let us observe what happens. Firstly, don't panic. If you are investor for long time, if your horizon is longer, then no need to panic. You keep on holding your portfolio and be prepared. If at all the crash comes, if at all there is a correction in the market, be prepared to hedge it in using FNO trading, and you can avoid the notional damage for the sub period. But there is no need to exit if your time horizon is longer. If you are a short term to medium term investor, you can plan a systematic exit using trailing stop loss. That trailing stop loss can be weekly bearish candle closing below 5 EMA, or you can use super trend or any other trailing stop loss method you can use to consider exiting or booking profit partially in your investment. If you want to know more about the trailing stop loss, do let me know in the comment section. I'll make another video what are the different methods you can use as a trailing stop loss. As a trader, how you can use this knowledge is, first of all, keep away from the market. If you notice there is a distribution happen, if you suspect, then you better keep away from the market, as this phase can be very tricky and volatile. You can plan your intraday trades only. So whatever you see, if there is a rally, you be bullish. If there is a decline, you be bearish. Plan your trade only intraday till the time there is important supports are intact. Once you see that important supports are breaking down, or even 200 EMA is breaking down, and the correction is evident, you can confirm with the Dow theory. Then and then only you can plan your positional short trade, and not before that. So that is how you can use this knowledge. But yes, confirmation is must. Confirmation on the front of fundamental analysis, on the front of technical analysis is must. Then only you can plan accordingly. Lastly, I would like to end this presentation on the quote which is by Professor John Templeton, that bull markets are born on pessimism. So whenever there is a bear market, everyone is pessimistic, no one is having any hope, and that is how the bull markets born. So ultimately there is a hope that generates more and more people eventually get involved, they start buying, and that is how the bull markets are formed. It grows on skepticism. People are still not ready to believe that this market is going to go up. There is still anxiety, and that is how the bull market grow. It matures on optimism. So whenever there is a great rally, everyone is optimistic. So that is the time bull market matures, and that is somewhere it's the indication that it is now going to end, and ultimately it will die on euphoria. So that's how this is all what I do understand about distribution phase. And let me make a bold statement here that currently I do feel that on a higher time frame we are on in a distribution phase. So let's not panic, but use this knowledge for the better execution in front, as an investor and as a trader. Do let me know in the comment section that what are your views. If you have any contrary view, I'll be happy to know that, and we can discuss. If you feel any opinion about the same, please do let me know. Thank you.